Good afternoon, Helene.
Hello, Sabine.
I'm so excited to have you on our webinar podcast series. Thank you very much for joining me.
It's lovely to be here. It's been a while since we got to have a good old natter about the industry.
Absolutely. And I think we have so much to talk about, right? You have been really busy writing a book, Reinventing Banking and Finance, a framework to navigate global fintech innovation. And I was looking for it last year, and I realized it was made available for purchase in November of last year. And so I got my copy.
Thank you very much.
Congratulations.
It got delayed, obviously, because of COVID, which so many things got delayed by. We were meant to launch the book in June, and then that couldn't happen. So thankfully it is out there, and it was available in the US shortly after that. And it's also been translated into Chinese.
Oh, congratulations.
Thank you.
So how has been the response to the book so far?
Well, initially it sold out, which was a good sign. So we were, and we laughed. We said, it's not just us and our parents buying up all the copies. And then just this week on Investopedia, it ranks number 1 in the banking books of 2021. So we're pleased about that as well.
Congratulations. Yeah. This is absolutely amazing. And you work on this book with Alessandro Attami.
That's right. Alessandro Attami, who's, again, a veteran of the banking and the fintech industry. Two Italians with the pens in hand or at the keyboard. And we had quite a tight deadline to get it all together. But amazingly, you'd think it'd be difficult to co-write with somebody when you're, thick of it. But it was okay. It was fine. And we have our individual strengths.
And that's great. I've gone through the book. I took some of those beautiful pictures you have in there. So what I may actually ask is one of my designers to work on some of the infographics as well, to actually also show people through this webinar and podcast, I guess, some of the great frameworks you actually built into the book to actually help people understand how to reinvent banking. I think my insurance partners, the company I work with, could learn from it to reinvent insurance as well. And I think I realized some of the frameworks you talk about were even going into GAFA models and fintech, very fascinating. One thing I love is some of the quotes at the beginning of the book. You have a lot of wonderful quotes from people within the sector. The one from Josh Bottomley is really nice. He says, a compelling narrative of the history forces threats and opportunities that are shaping the financial industry. The experience of the authors shines through their confidence and accessible writing, as well as in their cross-continental overview of the key institutions and people that are enabling better ways for all of us to manage our money in the mobile and data-centered world we live in. Really nice and really, long statement, but actually telling everything you need to know about the fact that we are going digital. So our big data, it's about understanding how the whole thing has been shaping itself up to now, right? Really lovely quote for you here.
Yeah, I agree with you. And as he says in the cross-continental, we have a global view, as you have a global view. And we know that there is no longer the ability to just stay within your own confined geographical space because it crosses all the borders. Yeah. And the historical side of it, we were very determined to go back to the 1200s, as it were. Mm. And again, back to Italy, where a lot of banking started. And hyper-personalisation in banking started. So it was actually quite an enjoyable jaunt back through the past.
Very nice. So which takes me to, I guess, my first question. The first part of the book is about going into history, right? It's about looking at banking yesterday, looking at banking system today, what worked well and what worked less. So can you tell us your views on those?
Yes, and it's interesting that we assume banking is what banking is for us today, or most people do, and depending on how old you are and how much of banking you've experienced as well, right? Everyone makes the assumption that it was just digital to start with, and the irony of going back in time is when we talk about hyper-personalization, where you had, maybe one very important client, maybe it was someone who was an aristocrat or someone who was well known in society, and a bank that service that client. This is one form of hyper-personalization. And of course, banking and finance, and particularly fintech, as we know it now, is the full circle back to hyper-personalization, except we're doing it at scale now. So we've gone through the journey of what we would see as primitive banking, where it is more physical banking, and it was done over a bank or a plank in a piazza, for example. And it wasn't until the 1700s that we actually had a bank note at the Bank of England. Prior to that, it would have been shells and grain and coins and other things, right? And what we know as a banknote wasn't there until the 1700s. But as we made the journey through time, the Industrial Revolution had a very big impact on banking, because as it did in the rest of our society and economy, we now have mass servicing from an industrial and manufacturing point of view to the masses, from a couture before that. We have the same thing in financial services. And the industrial banking took away some of the personalization, took away some of the individuality of banking, which intensified as we moved on to what we knew as the IT side of banking in, say, the 1950s, where we were able to use technology, as it was then, to begin to store more data, begin to process more data, begin to get out with more products and services to a wider audience. And I say products and services because, as we know, part of the problem with banking up until this last digital revolution was that it was driven by products, internally driven by products from a bank, with a margin, with a target that was generating revenue, whereas was not driven by the customer from an outside in, it was an inside out. And the IT part of banking, that part of the revolution, made that even worse because the machines took away the personalization. Of course, we have the branch network happening. We have people speaking with human beings, which again has changed now more often than. And then we kind of went into the digital after we had the IT. And the digital, which we'll look at, I know we're looking at challenger banks and neobanks, taking it out of large rooms of IBM mainframes or others, built on COBOL, a 1969 language that no one really uses anymore except to hold these machines and our incumbent banks together, and moved it out to a more, let's say, we're so used to doing digital with social media and the way we interact online, and the internet brought about that ability, that change. Tim Berners-Lee and the internet brought about that change for us to be able to do things online, like First Direct, for example, online banking or telephone banking. And then in 2007, the smartphone took that to its apex, where you could have the bank in your pocket. Now, ironically, we have gone sort of back with the digital to being able to, with regulations like open banking and with other technologies like APIs, to get that hyper-personalization back, except this time at scale. So we lost that when we just had the industrial bank at scale. And then we had the IT bank, which was also more impersonal, unless you had a relationship with the bank manager. And then we moved on to the digital bank, bringing back hyper-personalization. But there is still that question of how much do I need a human interface? And this is where we are grappling right now. Yeah. I mean, COVID has obviously brought this to the fore. The pandemic means that we can't often go into a branch, and so many people that hadn't downloaded, for example, their incumbent bank digital app have now, and that's actually shown up some of its inadequacies if it's clunky on the UX side. Yeah. But also, if you
sometimes they don't even have them.
Have it exactly.
I've just had to open a new bank account because of the structure of the business I've built. I could not go for my favorite bank. And it was interesting because whilst I went for a bigger, a more sophisticated bank account because I have to do international transaction, no mobile app available. So only desktop. So that was a little bit shocking for me, but hey, no choice right now.
And I think this is a good point as well, because sometimes we could see an incumbent actually bolting on a digital app, which is clunky and the experience is not good. And we've all been there, right? It's that, reaching out and just trying to be part of the party. And then you have the purely digital native bank, which is built around that app to start with. And so it is that more frictionless, cheaper, quicker experience that you want to have as a user. And then you still get into this situation where you can't have what you want, right? So this is also a moment of reckoning for all these new banks, because the way that they're funded is now, given the crisis, there's an impact on whether or not they have the potential to survive. And I expect that we're going to see some consolidation. This morning, there was another announcement, for example, in Australia, where another of the neobanks was just acquired. And we know that's never easy. Yeah. Right? Two DNAs that don't often wrap around the strand very well. So we'll see what happens there.
See what happens. And that takes me to an interesting point, actually, Helene. So you mentioned the different transition to become highly personalized. So is it why fintech is doing so well? And my question will be, is fintech still doing very well? And is it still disrupting finance at its core today?
It's interesting, isn't it? Because initially when fintech as we know it as a moniker came on the scene in like 2011, 2012, right? But the technology of the day servicing the financial needs of its community has been around forever, whether it was the telegraph or it was the first 1950s credit cards or the 60s in the ATM. They were all technologies that met our financial needs. It was the smartphone that really made the switch. And that again, ironic that that was launched during the last financial crisis. So we were in the middle of a crisis, but we actually had a tool that would enable us to be more connected with our finances. And I think all of us would have asked ourselves, when we saw the things that came out of it, like the peer-to-peer lending platforms, for example, was that disruptive genuinely, or was that just using tech that already existed? Algorithms have been around forever. APIs have been around for a long time in different formats. Were we just plugging that into a low-cost infrastructure built in Java, Java Plus, without having lots of physical bricks and mortar 19th century inheritance? And was it just a different distribution channel and not really a disruptive business model is the question. Mm-hmm. Because I think up to this point, a lot of what's been coming out has just been, a vanilla bank, but in your pocket as opposed to on your corner, really. So to be genuinely disruptive, some of the enablers are technology, some of the enablers are regulation. So if we look at open banking, for example, which was spawned out of PSD2, that's a game changer, because now I can share my data with a third party and bypass paying interchange fees, for example. And the bank has to share data with the fintech. So it's a two-way traction, a two-way tube on that API with data going both ways. But that was not until 2018. And that really was triggered by the Competition and Markets Authority, for example, in this country, saying banking was not competitive enough for SMEs or SMBs, as well as individuals, because up to that point, I think something like over or almost 80% of SME banking was in the accounts, in the banks of 6 high street banks. Whereas in 1960, the UK had about 150 banks. But over time, between mergers and closures, we got down to these 6 high street banks that were really controlling majority of our accounts and therefore not competitive. There were other attempts at schemes like the bank referral scheme to make that if you got rejected from you could be referred somewhere else. Really didn't do very much. And so open banking happened. And now we're 3 years into open banking, and we've already moved on to open finance, where we can pay each other, as it were, and embedded finance, where you can actually finance the transaction in the transaction. Yeah. So I think we're, in my opinion, in 5 years' time, and I know we'll look at the future, we'll be able to sit here and go, here's my app. I choose this, and this provider, and I'm going to DIY my own bank. and put together the products and services that I want. And that's where fintech absolutely comes into its own.
And so it's interesting because you're touching upon already some areas. So in insurance, for instance, we are starting seeing open insurance. So open data discussions, I tend to be a little bit involved with. We are talking about APIs and how API is going to be a core fabric to transforming transactions within our engagement within insurance beyond just transaction. And so when you look at the current digital threats which are impacting our world, why do we need to pay more attention to those right now, Helene?
I think, I mean, so there's the ultimate threat if we think about threats in terms of security, and that's all been exacerbated from working from home, whether you're the bank employee or the bank or us, right? We're all more at risk working from home. There's no question about it. Scams are up, and we're all looking for phishing and other things like that on our laptops. So that kind of made people aware that there's a legitimate and real threat. However, there are other threats. And I'd say that just technology in general, we have so much data, right? And yes, we have APIs and we have open banking, and banks have been sitting on what, we used to call the European butter mountain, where there was a load of butter that was being churned out and then thrown away or subsidized. I call it the European data mountain because we have so much data. But what do we do with that data? There's a chance that there's too much and that we're overloaded and we don't use it in a way that is logical. But it is an enabler for you and I to get the products and the services that we want, and for it to bring more profit and revenue for a financial institution, and also make them more efficient in the back end. Our behavior as customers has changed. We're used to social media. We're used to, as I say, the internet. We don't even know these things were happening to us, but we are online all the time, 24/7, omni-channel, want our banking to be the same. And some of the banks didn't actually catch up quickly enough, whereas the digital or mobile only were there anyway. So there's an element of a lag sort of in a large organization to catch up with online. And of course, at the same time as this is happening, we would say before, why didn't the incumbents take action in 2013, 2014, when fintech was out to eat your lunch and I hate you so much and I'm going to take you out? Mm-hmm. And the incumbents were kind of just going, there, child, just, let them settle, let them cry themselves to sleep, right? Kind of thing. Entrepreneurs that were funded by venture capital, angels, private equity, crowdfunding, using those tools as well. And there was so much hype, media hype, and they had to, because if they were applying for a license for their neobank, they had to get custom. And if they wanted people to take them seriously and put more money into them, they had to make a lot of noise. But the incumbents were kind of sitting back saying, I have 30 million customers. I've got a lot of money in capital reserves. You go away and let me see how long it takes you to achieve scale, because that's going to be your challenge, is getting to scale, which is why we're seeing more partnerships happening now. And I think the other thing is that, particularly in the UK, the regulator was benevolent. Regulation can help or hinder. And we see now with the sandboxes and the bridges, all regulation is being baked into the proposition when it's being formulated. And in the UK, we're in an unusual situation because our regulator is also there to encourage, let's say, commerce, or to encourage competition and engagement for the regulated companies in other parts of the world. It's not every regulator that has that. It's usually about protecting the consumer. So I think they were caught a little bit on the back foot in the beginning, same way they were with the internet, and regulation was catching up when Project Innovate launched. And the first sandbox was kind of a response to going, wow, there's a real demand here. And we need to be able to let these fintechs try out their offering with these incumbents, for example, or with other fintechs in a safe, secure, moderated space where we can interact with them and arrive at what needs to be a regulation if it needs to be. We're a principles-based regulator in the UK versus a rules-based regulator in the US. And in the US, there's something like 35 regulators. where we're very fortunate. We have the FCA and the PRA, which is part of the Bank of England. And we have 60 odd million people instead of 200 and something or 300 million people.
Yeah.
So it's a much simpler system here, which is why so much gets tried out here. You know, the UK is one of those great crossroads. We have the time zone working in our favor. We have a lot of universities that attract global talent who set up their businesses here. We have a wonderful tax incentive system from Treasury and government that supports people who want to set up their businesses here. We have the visas, and we now have the new global visa as well. English, which is most of the language of finance, and a concentration of financial institutions. So we are the perfect storm in the UK for things to be tried out with the slim regulatory environment.
So now I'm because, you know, we talk often about neobanks, and it would be great to actually understand your definition of a neobank and why are those so important now in our, you know, in our world, and what is so great about them.
So it's funny because I've been having this conversation about what's a neobank versus a challenger bank a lot lately. And I have to say, there is no real definition. Okay. So, you know, I think most people would accept a neobank starts out without a banking license, may apply for a banking license, or may have a bank of record in the background. That's kind of what most people would accept. It's built on a very slim, flexible micro versus monolith platform, usually built in Java, Java Plus, and employs APIs to connect to other products and services. It's essentially all digital, although if you have cash that you can't shove into your iPhone or your smartphone, you need to go to the post office or PayPoint or somewhere else, or One Banks now that sets up kiosks to actually use cash. We're not using so much of it now, but there are alternatives for that. So that might be a bank that was spun out from an incumbent and they're using their license. It might be one like Daylight in the US, that is the LGBTQ bank that was built with a bank of record in the background, but built in its own community. Or it could have been Starling Bank. And then if we look at the challenger banks, so what people think of challenger banks, for me, this breaks down into 4 categories. There's a full-size, mid-sized, full-service bank like Metro Bank. There's a digital bank like a Starling Bank, a purely digital bank. There's a non-bank like a Tesco or another supermarket bank who really want your data. And there's a specialist bank for mortgages, for example. And that's where I see anything challenging what was the incumbent, high street incumbent banks. But to be a bank, it's important to remember that you need a banking license. I think people forget this. And that, you know, there are other ways to engage with finances. So maybe you have a bank of record in the background. You use accounting packages to simplify and integrate with my banking transactions, but you're not a bank. There's a bank behind you. And the regulator did slap a few wrists in the beginning of this journey for being a bit misleading in the way they advertised this.
And when you said they have been quite, you know, reprimanding behavior that were there fines, what happened?
And I think the regulator being the way it is, they call them to action and say, look, we see this, we'll give you a chance to rectify. But in some cases there are fines. And I guess it depends. You know, I would say that some of these banks, and I don't think this is unusual. You know, these are entrepreneurs that set these banks up. They're on full throttle, full forward. You know, they see them as exciting startups. You have to remember, though, that you're regulated. It's a regulated industry. And if you color outside of the lines, as it were, whether that's on AML or KYC or the way you treat your people internally or the way you engage with your customers, the regulator's going to come back. And what I'm seeing now is that they're hiring what I'll call more of the experienced back office. So some people who are ex-regulators or ex-bankers for decades are now coming on to the C-suite or the boards of some of these
No.
what were new banks. Yeah. And I think it's logical. You push the boundaries because that's what you do as an entrepreneur.
Mm-hmm.
And when you push too far and you get slapped, you bring in the more experienced people.
Yeah. And that's very important. We see that as well, as you would expect in insurance,
right,
where, you need a license, whether you're a broker, you need to have a brokerage license, or an insurer, same, very highly regulated. So a lot of lesson to be learned in fintech, which crosses over into insurance.
You see this also just in the wealth side, right? Because we used to have more IFAs, but when there was mis-selling and it became more about personal fines and personal responsibility, that market really thinned out.
Yeah.
And it's ironic that I actually think more people would like that to be offered from their banks, but the banks are not doing it, and they should partner with the fintechs or license some rails on the wealth management side to meet the needs of their customer base, because they have them. They have that data. They have that trusted relationship, but they're not responding.
Yeah, and often it's, either the market sizing is not big enough, or it's not even being able to listen to the customer in the right way. And I think we see that a lot of incumbents in general, that there is some level of complacency, or we are too big to do things, where often the client's needs are not completely understood, and so that drive misguided decisions and potentially missed opportunities, I think.
And Asha, when I listen to you say that, we both know that we've gone through so many discussions with people where they couldn't identify their challenges as an incumbent, they couldn't articulate a problem statement, they couldn't actually workshop their way through to see what they could create, right? Obviously strategically aligned, and that has an impact on what you're not offering. And of course the fintechs coming up on the side going, or the insurtech, hey, we have that, we can supply that for you, and don't worry about it, we'll either be regulated or we'll partner with somebody who is regulated, and then we'll supply you. I think what is also great about fintechs and insurtechs is they do one thing really well, and that
it's interesting. It's actually interesting to see that a lot of the commentary you've just made also applies to insurance, right? We've seen that insurers, and we know that insurers and brokers need licenses to actually operate. And in particular, because they're highly regulated. And so, what you were mentioning in the banking sector also very much apply in insurance. And so there's a lot of lesson for us to transfer and learn from the fintech sector.
I love the insurance industry because it took banking ages to kind of wake up to the fact that the threat outside was greater than what was happening inside. We talk about Kodak and Blockbuster and all these other kind of moments that somebody could have had. Insurance, seems to me that insurance and insurtechs had a much better collaborative partnership relationship from the get-go, that whereas banks and fintechs were, as I said, adversaries, the whole David and Goliath, and they've now grown up, they've matured, the fintechs, and they know they need their parents if they're going to achieve scale, and they're working very well collaboratively now. But I applaud the insurance industry for getting there first.
Yeah, and I guess sometimes you can learn from your cousin in the industry. So one thing which I noticed as well when reviewing your book is, so you are talking about the phases of digital transformation and how big tech plays a key role into it. I would love for you to explain what those phases are, because you have a very clear framework you're actually deploying into the book.
Yeah, and I think the adapt, evolve, transform model, which we know and we see at Pacemakers, where Alessandro leads his business. We know that most of the large organizations, they're not digital from the top down or from the bottom up, and so they do things in actual longer term phases. It's like having a meeting to have a meeting, and then you have committees that have a meeting to have a meeting to have committees to then deliver something, right? It's not agile, it's not iterative. We know that neobanks, for example, or new challenger banks will have many updates within a week, not even within a month, whereas a large incumbent might have 2 a year if you're lucky. So that concept of how they, and that will be part of their IT structure as well. So that way of working can't be anymore. But this whole concept of building in-house and wanting to build in-house sometimes will run in parallel with what they do experimenting or engaging on the outside. So the buy or build decisions that you make will sometimes be running in parallel. Now, is that a wise thing to do? Is it a good use of money? Probably not, but they have to prove to themselves that they can do it internally as well as externally. And again, the external relationship that you have has to be with a company that has enough finance and human resource to weather that storm and to go the duration of the relationship. So it's not startups. It's the scale-ups that you and I have enjoyed working with for so many years, who actually can deliver on the proposition if you're going to either buy or partner on the outside. And you can do a mix, right? But as you evolve and transform your own self, you have to attract the talent to do that. You have to manage that group of people internally and externally. You need to find the channel that you're going to distribute it to your consumer, and you need to find the right suppliers. And so, you might think, well, okay, we need to speak to our people more frequently without using a human resource. Let's go back to the chatbot, right? Or the robotic side. That might then be the thing that you create and then you test it, but you only test it with one of your products and services before you actually roll it out, or you engage with a company that just does chatbots or a different IVR business. And if it's something that's not, let's say, core to your structure and your financial core, you can do this with other services on the outside. So outsourcing actually makes perfect sense there. But it is an iterative thing, because you find you realize it, you adapt your organization culturally and technologically to see that. You evolve what that product and service might be before you transform an old product, in this case, a human interaction or a call center, to the chatbot, and then launch it through a certain channel for a certain product. Now that takes time. Yeah. And the better you are at engaging with a fintech, the quicker you are at getting to the end game there. And people are better now. I think we remember the days of experimentation with fintechs, which was just sort of throwing 50,000 on the table and playing around for a little bit. Now that co-creation stage where you're actually going to build something or deploy something with a business that does one thing well. Yeah. Right. Now you can actually see that happening more at pace, but that took a while. And there have to be some brave people in the incumbent organization who are genuinely innovators who will take that on.
And so, I mean, it's interesting because do you think that there's still a lot to be done within, and it's probably asking the obvious, but do you think there is still a lot to be done when you look at the relationship between fintech and incumbents, and going on to that path where we can start democratizing and industrializing that collaboration process?
It's very interesting, because I keep reading all these things in my LinkedIn feed that say, these are the 10 things you have to do to have genuine innovation, or the 5 things for co-creation. And each time I read them, I'm screaming at my screen going, we know what to do. Everybody knows what to do. You just have to do it.
Yes, do it.
Do it, exactly. put those trainers on and just do it.
Maybe we should,
right?
Put those trainers on without naming the brands.
Right, exactly. No, everyone knows what to do, right? That's not the problem. You need to be given space and finance to fail, of course, and that needs to be okay, and it needs to not damage your career prospects if you're going to do that. And that needs to come from the top. That definitely needs to come from the top. That if that doesn't permeate from the top down, then no one will do it. And if the top is at a point in his or her career where they're about to exit that role and they don't want to rock the boat, they're probably not going to do it.
Yeah.
But we know what to do. Sure. And we see a lot of initiatives that are sign this pledge, sign that pledge, which are all voluntary pledges, and I'm glad we're talking about it. But as long as it's voluntary, not everybody's going to do it. And we are trying to streamline, for example, the onboarding or procurement process for a fintech with an incumbent. You don't get 100 pages anymore. Most places have a fast track. Okay. We do understand the internal champion, and we do understand the internal sales process, but we're not there yet. And I think that's partly to do with compliance, if I'm honest, and part of the incumbent, because compliance is a massive amount of money spent on compliance, but also, you know, the stick of compliance will hit hard if you do something wrong. The fines are huge, and the implications when it comes to things like data breaches are huge. So you have to trust that the fintech is okay for you to. That's why I think if you start on the periphery with things that are not actually touching so much of your soul as an incumbent, then you can at least get better at that. But it's beyond entrepreneur and resident now and all those things. I mean, we passed that.
And so when you look at the build, I'm trying to find the right word, because I saw that in the book you're talking about building, leveraging in-house skills to actually adapt and actually help to build from within, but then also the balance with attracting talent and changing the internal culture. So my question is, when should companies start building, venture building? Is there a time for success for that?
It's interesting, and this whole, as I say, build, buy, and license. I'm going to throw license in as the last one, right? Because we see people licensing banking as a software service and all these other things as well. I think if you've come to the point where, so one thing that people will build is a new digital bank. Right. If you're an incumbent and you can't build on a COBOL structure, you can't build on a siloed structure. There's no point. And I can remember having these conversations back in 2013, 2014, when I was at the trade body with people saying, well, what do you think is going to happen? Are they going to gradually wean themselves off? There's no way to wean. It is what it is. It's an inflexible language that's not in the cloud, and you have to be in the cloud now if you're going to do anything at scale and at cost on a digital side. So what will happen with all those machines in those big rooms? I don't know. It will have some function potentially in wholesale banking, but building digital from scratch makes sense. So that's when the build makes sense, and you can then partner with some of the fintechs in that situation. I think buying things like KYC or onboarding, there's a lot of good solutions out there. Sweeping data lakes, there are good solutions out there. You don't need to do that internally. So those things, I think other people do that better. Fintechs do that better. So just buy it. Then, of course, there's the conversation around, do you buy the company?
Yes.
Right? Or do you partner with them? Or do you refer to them? Or do you just have them as a supplier? And they're all different relationships. You could buy a card business if you're a large incumbent and then garner a whole new marketplace. You could buy a bank like BBVA did with Simple, and then they sold it, and they were early. That was 2009, I think, so it was quite early. You could do the Tink partnered up with some of the Dutch, one of the Dutch banks, and then that spun out now, and they become a vendor, right, for example. So I think you have to decide how much brand equity, how much money, and how much time do I want to put into this if I'm going to explore something with an external party? And then you can decide what that relationship will be. But for digital banks, it's definitely built from scratch.
So tell us a little bit more about what are fintech tribes.
The tribes, the challengers, the innovators, the champions of the unbanked, the social banks, those kind of people. I mean, I think we start looking at the market and how it's shifted out. The challenges, obviously, we've been speaking about the challenges. They're a tribe of their own, aren't they? And they started out, as I said, trying to eat everybody's lunch. And, what always amazes me is that the general population, if they see it on Twitter or they read about it, they think, and so it must be so. And everyone was like, yeah, this is the way it's going to be from now on. And then if you ask a challenger bank, they're like, no, it's not going to be like this in 3 or 4 or 5 years, right? This was a moment. There was a moment where technology enabled them, remembering that money also was looking for a return. There was nowhere to put it after the financial crisis. You had a generation of millennials who had these phones, and there was money looking for a return. It was the perfect storm to create this. That's not to say that that's forever. And of course, we've had the payment innovators like the PayPals, the Google Pays. Google Pay Plus has just come out again, where they can scan your emails and make the payments for you if you want to give over that much control. I will say we are, as people, getting a bit more like, who has access to my what now?
Yeah.
Whereas I think before we were a bit like, yeah, it's all right. Well, you can turn your back. Yeah, that's all right. My camera, you can have my camera, because we're being scammed. because we're worried now. And some of these solutions rely on you giving them access. But, if you're buying, I don't know, a shredder, and you're in the transaction, and Amazon or someone comes up and says, hey, you're here. Do you want to spread those payments? And we can do that right now. You've been pre-approved. I get pre-approved from everywhere all the time. You're like, hey, do you know what? I wasn't thinking about that, but I'm going to take advantage of that and do it right now. And of course, buy now, pay later is gone mad in the world. Klarna, made everybody aware of it, but there were other firms before that, like Divido, and we see Tencent investing in Afterpay in Australia, and another one, I think it's an Italian one, has just come out today with a fundraise of $45 million or something along those lines. And there's a big debate around the ethics of buy now, pay later. Are you encouraging people to get into more debt? Should you be educating them about what they're doing? But, it seems to be just taking off. Now, I'm old enough to remember layaway, where you would go in and buy something and put your dollars down every week until you could take it home. So there was no instant gratification. But that's an old structure that's now been put on steroids with fintech. And of course, as we talk about people getting further into debt, we look at the unbanked, and you see other solutions. This could be anything from credit scoring to other ways to make peer-to-peer payments, to tokenize payments. So if you're unbanked, payments then become remittances is a big space here. And we know that we still have roughly 2 billion people who are unbanked globally. Mm-hmm. But in emerging markets, they haven't got the legacy systems that we have in other parts of the world. Yeah. They can be quicker to genuinely innovate in this space. And we see this with things like M-Pesa, for example, who also are a bit of the social tribe in terms of bank challenges. Nubank in Brazil, same thing. They set out to help the people that were unbanked. And there are parts of the world where this is a massive problem. I still don't know how we're getting here in this day and age, but we are there in this day and age. And cash right now is not something that anyone wants to touch, physically touch.
Yes. Today, you know what? If I can do everything with no cash, it would be absolutely awesome. But every so often, for some reason, you still need a little bit. So you still have to walk to ATM and get a little bit of money because you just need that little cash because not everything is completely touchless. And we'll see how that goes, whether there are other mechanisms, even, when, I have my cleaner coming back, can I pay her in different ways? Because you need that cash still from transactions.
And you can now, if she has a bank account, for example, you can generate a QR code. There are things that are coming out that will soon be released. They're in trial, like Tomato Pay with Fractal Labs, where you can generate the QR code and we can scan our codes and you can pay me directly with the QR codes. Now, there's only certain banks within their trial system, but this whole open finance, peer-to-peer payments. Now, this has an impact on people like the card companies because they made their money from the interchange fee traditionally. And we don't have to pay, and the merchant doesn't have to pay the interchange fee anymore. So hands up and clap, clap for MasterCard and Visa because they saw the writing on the wall, unlike banking that saw the writing on the wall with the whole Spotify and Blockbuster and did nothing. MasterCard and Visa actually pivoted their business model to bring in more solutions for their customers.
Yeah.
Instead of just looking at the interchange fee, which they know is starting to go away.
Yeah.
Right?
Absolutely.
I give them that much. I do give them that much, and all the infrastructure that we've created for payments, for peer-to-peer, they're all creating new sets of low-cost, simple infrastructures that can be manipulated quite quickly and quite easily, which is great. I think that's great. But they rely on the cloud and they rely on a virtual model. And I do think regulation has helped in this way. And I think as people Maybe, you know, the silver lining of what's happened to us in the last year and some change is that we're kinder to each other and we're looking for more solutions, and we're all a bit more open to accepting digital and innovation than we were before.
So, I mean, you know, we are arriving toward the end of our discussion, but you mentioned something around technology, and we know that highly regulated industry often has a problem with the cloud. I want you to tell me what is happening from a technology viewpoint with regards to usage of cloud technology, combining that with AI, you know, the big data, and, you know, potentially the blockchain. You know, when you look at the Chinese big players, you mentioned Tencent, you know, we have Zhonghan, we have Pinghan in insurance, and those guys have built their whole infrastructure on what they call the ABCDs. And so would like to hear from you what you see happening in fintech, and whether Incumbent already embracing that thing's called cloud.
Actually, and some of the names that you mentioned, like Zhong'an, they got the first virtual licenses that were issued in Hong Kong in 2018 and 2019 went to these large organizations, right? And virtual that they are on the cloud. And it's not too long ago, it must have been maybe 2017, where we would speak to incumbents and talk about the cloud. I can vividly remember having a conversation about lending as a software solution and someone presenting a cloud solution and the incumbents going, absolutely not possible.
Exactly.
Can't do it. Data's not secure. Can't do it. Nothing on the AWS cloud, right? It's got to be my cloud or iCloud. And there are versions of the cloud that are out there. And you can now kind of think, well, there is a bit of the cloud here. But you, even with the conversations with the regulator going, okay, so where are you storing the data? Yeah. I don't know. It's in the cloud. What do you mean it's in the cloud? It's in the cloud. It's somewhere in the cloud, right? I pay for my usage. I pay for my storage. And I have my space in the cloud. But I can see, again, there are some, for example, that have spawned outside and they're using the cloud in the outside space. You know, Thought Machine, for example, working with Lloyd's, or Metal at NatWest. You know, you have to be in the cloud because you can't compete on price with everybody else in that space. Is there a belief that someone will hack the cloud one day? Yes, that someone believes that, right? But we've been hacked in other ways, and there are probably something like 50,000 hacks a year that go unreported and only noticed by certain people. I think now we're fully embraced in the cloud, and all the new digital banks are built on using cloud technology. The work that I'm doing with Vacuum Labs, actually in February, we'll be doing a session on this with Thought Machine and GPS, the payments processing people. What is the cloud? What are the flavors of the cloud? Okay. Where do I start with the cloud? Because it all has to be, I think it didn't take long. It took 2 years, and everybody in the digital world went to the cloud, but not so much in the bricks and mortar world.
And I assume the Vacuum Labs, you know, they are, you know, technology savvy, able to work with a multitude of partners to actually start building those new ecosystems for banks, for insurance companies, and the like.
Yeah, and you can either build a bank or you can build a banking platform with a bank of record in the background. And I think what's happened, if we go back to why were some of these neobanks so successful, we've been able to get down into more niche, into much more of who's the community that I'm serving. You don't need, if you had to spend 400 million or 400 of whatever your currency is, drawing your crowd to you and your community. If you have one already, you don't have to do that. You need slimline, less expensive, faster to market technology that enables you to create products and services that serve that community, be they teachers or nurses or the LGBTQ community or whoever it might be, because they have specific needs. They don't need another bank account. And there are a bunch of banks, and in my love for community banks, they can step up here and provide the bank of record for behind these communities or communities of affinity. And then I just get, as that community member, I get what I need. Whether I'm a last mile delivery driver or I'm a teacher, as I said, I just want certain products and services, and they're so easy to build now and integrate with your core.
Yeah, an amazing world. So I'm going to ask you, I guess, my last question. what are the last few words you would want to leave behind with the wonderful people who are going to listen to this podcast and to visualize this webinar as well? I would love if you could put your answer in the context of emerging risks, the world we are entering in. We've learned a lot for the past year around things we didn't know about ourselves and how we could become maybe more resilient as businesses as well and individuals.
Yeah, I watched the unfolding for the SMEs and the SMBs during this pandemic, and it's amazing how many people were not online or hadn't transitioned their businesses in some way to being online. So one thing that people have learned in this space is get online and enable your business and yourself to take advantage of these new payments, products that are in the market, because payments has gone mad. From Stripe to, as I said, to Fractal and Tomato Pay, payments has gone mad. There's something for everybody now, which is a good thing because people are going to need that. So definitely stay online. And I would say the other thing is, remember that we started out centuries ago with hyper-personalization and servicing a community. Find your community and service it well, whether it's a geographical community or it's a community of affinity, and provide them with the products and services that they want and let them pay for them in a way that works for everybody, but recognize them as a community and feed that community. Don't just see them as customers that you're trying to sell something else to. That's gone. And banks have realized that as well.
I love it. Find your community, find your tribe, find, I guess, the emotions you can fulfill. That will be likely to be the way to thrive in the future, right? And fulfill the need of the customer.
You said that very well.
Well, thank you very much. Thank you very much for having spent some time with this afternoon, and look forward to continuing the conversation in the future.
Wonderful. Thank you for having me. It's been a joy.
Thank you.